In today's video, I'm going to teach you how to day trade on Robinhood without violating the PDT rule. This walkthrough is educational and designed to help you trade more deliberately with a clear plan each day. First, understand the pattern day trader or PDT rule. If you make 4 or more day trades within 5 business days, you're flagged as a pattern day trader and must maintain at least a $25,000 account balance. If your balance is below that threshold, you'll need to limit yourself to 3-day trades in that rolling 5-day window. Keep an eye on your account so you don't get restricted unexpectedly. Before the market opens, do your research and plan your entries and exits. Build a focused watch list of tickers you understand. Look for catalysts like earnings, company news, or broader market trends, and map out key price levels where you might buy, take profit, or cut the trade. Decide your risk to reward in advance so you're not improvising once the market is moving. Use Robinhood Legend, the advanced charting view, to analyze price action, volume, and indicators. Start with multiple timeframes to see the bigger trend and then zoom in for your entry. Watch how volume behaves at support and resistance. Consider simple indicators like moving averages, RSI, or VW app to help confirm your bias. Clean, consistent charting can keep you from reacting emotionally to noise. When it's time to execute, place your trades and monitor them closely. Consider using limit orders so you control your fills, and set your stop loss as soon as you enter. Stick to your plan. If price reaches your stop, exit without hesitation. If it reaches your target, take profits as planned. Avoid chasing spikes or averaging down without a defined reason. Let the trade play out according to your preparation. Track your day trades inside the app by going to Account, then Investing, then Day Trades. This page shows how many same-day round trips you've made within the 5 business day window. Remember, it's a rolling count. As older trades fall off, you regain room for new ones. This is essential if your balance is below $25,000. Finally, manage risk carefully. Use stop losses to protect your downside. Limit position size so a single trade can't damage your account. And avoid overtrading. Set a daily max loss and stick to it. If you hit your limit or your plan for the day is complete, step away. Consistency beats intensity in day trading. Follow these steps, keep your process simple, and you'll trade with more clarity and discipline while staying compliant with the PDT rule.